Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Thursday, August 22nd, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Where to begin? I'm going to cut right to the chase and mention a buy signal. Which chart do I want to show? I'll just go to the simple one, and that is 218.54. After pushing through it on Tuesday and not closing above it, we even opened above it on Tuesday. We also opened above it on Wednesday, but we closed above it. And so we closed also at a new post-August low high. And so 218.54 is our support that can contain selling not only through next week, but even into September trade. Once again, now anticipating over the next couple of months, 289 even and rising. This is our big picture objective. Yes, we're sort of swinging for the fences, but I do think it's realistic. And on the way up, there is going to be trouble, if you will, at 239.54 to 237 even. We do have an intraday pivot point at 228.22. That is nothing more than Tuesday's high. It may contain intraday buying pressures, possibly for a good part of the day. If we push early above 228.22, I do think there's a decent chance that by the closing bell, we will have tested 237 even, which is the 5/8 upside Fibonacci retracement from the July high against the August low. And it is really part of a range right now up to 239.54 that can contain daily buying pressures. Now, under other circumstances, I might consider this to be kind of a weekly resistance area, but I don't really want anyone getting hung up on a long-term short sale there. And what I mean by that is like through next week. I do think we could get some hesitation here for a day, 2 or 3. I don't know if we could then anticipate the market to fall all the way back to the speed line that is presently 218.54. I mean, of course, anything is possible, but I do see that we've got a buy signal that can play out, take hold now into September trade. So there is some trouble on the way up in the upper 230s, and 3 to 5 day swing traders can certainly play this. Above 218.54, the 239.54 level, now a 3 to 5 day target. You can take profits there. You can even play the short side there on a day trade basis. And sure, if you're a 3 to 5 day swing trade, that is the next area to sort of sell. But if we close above 239.54 in the coming days, and we may see that over the next 2 to 3 days, then we're anticipating within probably just another week of activity, 271 even, which is right about here on the chart. That could take a week or two, but this channel bottom is rising. So it is stair step, but big picture, holding above 218.54, I'm going to call it the 271 July high, a 2 to 3 week objective. And as I said before, this long-term channel top at 289 even, really kind of a 2-month objective. If we close above 271, you can see over the next few weeks, then we're just another week away from reaching 289 even, where we could top out possibly through the rest of the year. And so if you're an options trader, you might reach for 290 strike out of the money calls that don't expire for, I'd go at least 4 or 5 months out on that expiration. I like to go twice the distance in the expiration strike, versus the amount of time that I perceive it will take to reach it. If you're a short-term swing trader, and you're an options trader, you might reach for 239 or 240 strike out of the money calls that don't expire for, I'd go a couple of weeks out on that expiration, and I'll let you be the judge of that. If you trade, if you've been trading, you're adept at trading options, you probably have a better idea than I do in terms of what to do. Now, for the downside, 218.54 is backed up by a rising 1/3 speed line at 218.44. So this is convenient, a solid support for the day and through next week, and above which 271 even remains a 2 to 3 week target, and that 289 formation that I'm not going to show again over the next couple of months. But if we Well, first off, break 218.44. We can test 210.78 on an intraday basis. So be careful. You go long here in the 218.44.54 area, and the market begins to violate it. Just know that we can test 210.78 lickety split. And if we close today below 218.44, this after also closing above the 2/3 speed line at 218.54, that would be kind of a double sell signal, not only below the 1/3 speed line, but also the failure to follow through on a classic buy signal above 218.54. That should yield then, within 2 to 3 days, perhaps 200.25. And that is the rising 2/3 speed line that can absorb selling through next week. It is also our downward pivot point into September. I'm not comfortable suggesting being an aggressive short seller into September unless we close below 200.25. But if you want to have at it with a settlement below 218.54, if we close back below 218.54, that failure to follow through may have longer term implications, and that can happen. And so if you're a 2 to 3 week, a 1 to 2 month position trader, and we close below 218.54 and you're itching to go short, that is your signal. Just know that this market can bounce nicely at 200.25, and you may even cover some of your short position at 200.25 before the presumed then possible violation of 200.25, and then you jump back on with a full short position as we then would continue into September, October. Closing below 200.25 is our clear indication of 167.41 within about 2 to 3 weeks, and over the following 2 to 3 months at the most, I'd say a couple of months, we could fall all the way into the upper 120s and dropping. But we're a long way from that right now. In fact, we're just the opposite. Having closed above 218.54, we are now anticipating, bullish continuation over the next couple of months to 289 even. And once again, over the next 3 to 5 days or so, the upper 230s likely, where the market is bound to have some degree of trouble, if only for a day, possibly the better part of a week. Pushing above 228.22 today, you should anticipate the upper 230s within the day. Until then, we could trade two-sided framework for a good part of the day between 218.54 and 228.22. And I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com for that daily triple Q and SPY analysis. Our 2 stock picks a week. We offer a 5-day free trial up front. You got nothing to lose. I'll be back tomorrow with Friday's Tesla report, and you have a great day.